why maintain the dividend? I'm sure it requires a lot of other things to go by the wayside right now.
Well, Kelly, we reset ourselves in the last downturn our industry experienced in 2015 and 2016. And we have a return to shareholder target of greater than 30% of our cash going to the shareholder. That's made up of a fixed portion through the dividend and a variable or flexible portion through the share buybacks. We suspended that flexible portion, and we set the dividend back in 2015, 2016 that we thought we could maintain and through the downturn, through the cycles that our industry experiences. So we're very comfortable with where we sit. We're very strong financially and entered into this downturn in a very strong financial position. So we're not concerned.
Yeah, no, but Ryan, it's pretty stunning to say, oil can go to minus 37 a barrel and your company's fine and you're strong. I mean, walk us through the scenario analysis. If crude stays at 10, if it's at 0, if it goes up to 20 or 30, how much of a difference does that mean for your profitability or lack thereof?
Well, obviously, we're a function of what the commodity price is. So we expect the second and the third quarter to be pretty tough, which is why we've announced voluntary curtailments. We're just not going to sell our crude for the kinds of prices that are on offer right now. But we believe as this COVID-driven demand destruction works through the system, people come back to work around the globe and here in the United States, that demand is going to start to rise again, and we'll get prices rising off where you're seeing them today. But it is very distressed prices. But that's why we have a strong balance sheet, a lot of liquidity. Saw from our quarterly results, we came into this with $8 billion in cash on the balance sheet at the end of the first quarter, $6 billion undrawn revolver. So we've got the capability to kind of manage through that, use cash on the balance sheet. Yeah. And then we expect a recovery to come later in the year and into 2021 as we look forward, as the world kind of comes back to work.
I'm curious about two kind of tactical moves here. Number one is, where are you storing crude? And how much do you have to pay for that storage? Number two is, if your company can weather this but others can't, do you expect to be an acquirer?
Well, we're choosing to store our oil down in the reservoir, so we're choosing not to produce it. We've voluntarily curtailed for the month of June 460,000 barrels a day, which really represents about a third of our company's production. And we're, as I said, we're just not going to sell it for the kind of prices, but choosing to store that down the reservoir, which doesn't cost us anything, and we're not doing anything to damage the reservoir, so we know we can come back relatively quickly when the prices are acceptable to us at that point in time. But yeah, and certainly this situation has caused a lot of distress in our industry, and but it is in need of consolidation. There's too much fixed cost. Investors have too many choices. Your market cap's not relevant anymore. So absolutely, we're on the lookout. We're watching closely, but it's got to be accretive. Can't destroy our financial framework, but we're watching it very closely in the industry. The industry does need to consolidate to reduce that fixed cost.
Ryan, two quick questions, if I might. First, when you cut production by 460,000 barrels a day, does that mean that you actually shut that production, or that you just slow the production? And if you're shutting it, then how expensive is it to restart, and how long does that take?
Yeah, so no, Tyler, we are shutting in the production. We're not slowing it down. So in June, you should see that our production would go down on a gross operated barrel basis by 460,000 barrels a day. Now, on the flip side, we think it's going to be relatively easy and relatively quick. It's a matter of weeks, not months, to get our production back up when prices recover to an acceptable level to us that would have us then sell the oil back into the market. So we don't anticipate a lot of costs right now. There's not a lot of cash flow associated with this production, given the depressed prices.
So take us into your inner sanctum, if you would. When you saw oil futures go down to negative 37 last Monday, what was the feeling like in the pit of your stomach and that of your colleagues? What do you feel when you see that kind of action?
Well, Todd, I've been in the business 38 years. I've never seen it before. So, it was quite distressing and depressing to watch what happened. But we actually knew that this was coming. I mean, as we looked at our plans and scenarios and saw what the market was doing, saw what the demand destruction had been, we knew back in February and March that, April, May, and June were going to be difficult months. We started preparing ourselves for the kind of distress that we're seeing in the market, which has led to the curtailments and the the cutback in the production that we're doing as a company. But no one anticipated minus $38 a barrel. That was just unheard of, and something that just shows how the physical market is disconnected from that financial market. And you got to remember that the index price that you're looking at the board today doesn't really match the netback wellhead price either. So the physicals are disconnected from the financial.
And finally, Ryan, how is coronavirus affecting ConocoPhillips directly? Your workers, are you concerned about, having people on the job as that supply begins to ramp up? And are you guys going to all of a sudden potentially be in a situation of needing to ramp up production quickly as the economy recovers?
Well, I think, our hearts and prayers, thoughts go out to all the people that are on the front lines of battling this pandemic. And my hat goes off to our workforce. They've done a yeoman's job to keep the operations running strongly, which you saw in our first quarter results. We've had 10 cases across the company. That's 17 countries, over 10,000 employees. So we've been really fortunate. None of those cases have been work related. They've been vacation or family members have caused. Everybody's recovering, which is great inside the company. But it is a matter now here in our corporate headquarters in Houston. The governor of Texas is starting to slowly reopen the Texas economy, and we'll slowly start phasing in people back into the office, but encouraging them to continue to work from home. If they need tools that are here in the office to support their activity, then we're going to phased approach, but it's going to be with a lot of requirements around PPE and social distancing and all the guidelines that the federal government's put out and what Governor Abbott has put out.
Yeah. Ryan, thanks so much for your time this afternoon. We appreciate it.